My name is Mike Sullivan. I'm a former IRS agent and teaching instructor. This is the eighth damn time I've started this YouTube and something has happened 8 times. Anyway, I'm a national expert in IRS resolution matters. I worked at IRS for a decade. I've been doing this for 4 decades. Yes, I have been doing resolution work for, I don't know, 50 years. I've worked over 10,000 cases and I've been on all the major news stations. And just so you know, I have a firm, 777irs.com if you want to look us up. And we are national experts in every area of IRS resolution. So today, what I want to talk to you about is owing IRS, and as a former revenue officer, how IRS is going to work your case if you owe back taxes from Internal Revenue Service. So when you file your tax return, you are going to get a series of notices and letters from IRS. After you file your return, you're going to get a CP 14, then 501, 503, 504, and 1058. At that point in time, when you get to 1058, if you don't respond, IRS is going to send out a bank levy and a wage garnishment notice. But let's get past all that and say, how are we going to work the case if, in fact, you contact them within that period of time, which you must do before IRS sends you the 1058 letter and you don't file an appeal. So IRS is going to want to do, they're going to want to know two things right away. Are all your tax returns filed, and are you current on your current withholding or your estimate tax pay? That's really important to IRS because they want to stop the problem. They want to draw a line in the sand and say, yes, I'm up to date and I filed my returns. If you're not there yet, go ahead and do that before your encounter with Internal Revenue Service. The next thing they're going to want to do is they're going to want to take a current financial statement. If the case is at the service center, they're going to want a 433F. If the case is at the local office, they're going to want a 433A. Those are the ones I work with all the time. What IRS is going to do is they're going to want that financial statement verified, whether it's on the phone or with the revenue officer. They're going to want to go ahead, and what they're trying to do is they're trying to assess how they are going to collect the money from you. And the two things that are important most are your assets, your liquidity, and number two, your income and your expenses. Once IRS goes ahead and looks at that, they're going to close your case in one of three ways. Your case is either currently non-collectible, bit into hardship because your financial statement says you're upside down. Number two, you're going to be into a payment agreement or installment agreement. Or three, you're going to be able to settle your debt for pennies on a dollar. But before you start saying, I can settle my debt for pennies on a dollar, remember your current financial statement dictates how IRS, in fact, is going to close your case. If you're in a hardship or currently non-collectible, that means that your financial statements did not meet the standards for IRS to collect any money. If you have money left over at the end of the month, according to the IRS national standards, you're going to have a payment to IRS unless you go on their portal and enter into a payment agreement with them. And then if you're eligible for an offer and compromise, you're going to have to really contact somebody and let them walk you through the offer and compromise. I used to teach the offer and compromise program at Internal Revenue Service. I used to accept and deny offers, so I'm going to know right away if you're a candidate or not. So if your case is in the ACS office or the service center, you're going to go ahead and fax that information to them. Sometimes they'll take it over the phone, but they're going to want the documentation, such as your pay stubs and your copies of your expenses and your bank statements. If the case is with the revenue officer, you're going to want your entire 433A documented. If you aren't currently non-collectible, your case will go ahead and remain there for a couple years, and at some point in time, IRS will kick the case back out to have it reviewed, penalties and interest run. If you're in an installment agreement, there's different type of installment agreements, whether you're going to pay it over 6 years, 5 years, 4 years, or can you not pay it over the life of the statute? That's something else they will consider. If you're going to file an IRS offer and compromise, you have to know two things. The two most important things to get an offer through are what are the value of your assets and understanding the national standard expenses. What are the national standard expenses? IRS will dictate to you how much you can spend for food and clothing, housing and utilities, a car payment, and operation of your car. Do not go ahead and give a financial statement to IRS, or do not give anybody money unless they've reviewed your current financial statement. That will solely dictate the outcome of your case. It's so important you know what IRS is looking for. One last note on offers and compromise that you need to know. If you have $100,000 worth of total liquidity, IRS is not going to go ahead and accept your offer if you owe $100,000. IRS, the cardinal rule for IRS wants no less than the total equity in all your assets. So know that. We are available for consultations or representations. Call us. We're in the description section. You can contact us however you want. Remember, make a good, prudent decision on what you want to do. But when you call IRS, look at the national standards, look at my YouTubes on them, and know more about them, because they're going to drive how IRS is closing your case, and I don't want you to have a bigger payment than you need to. If you'd give me a subscription, I would appreciate it. Leave me comments if you would, and we'll go from there. Thank you so much.